Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today we are back with Justin Huhn of Uranium Insider. What's going on?
Hey, a little bit of everything, Daryl. Good to be back with you. How are you?
Man, doing pretty good. Just I think the Liberation Day was a test, a very big test. I saw my portfolio decline significantly, as everyone else probably experienced, unless they got out or played some puts on the SPY or something like that. But I went in and bought. I went in and started purchasing, not just uranium companies, but some of the other uh, mega cap companies that I've been keeping my eye on, and now my portfolio's bounced back significantly. So you got to be courageous during the downturns.
That's for sure. Yeah, we were chatting off camera a minute ago, and it sounds like you made some smart moves during that period. It's, this market, it has such extreme volatility, uranium specific, although the Liberation Day and the tariff concerns affected many markets, not just the uranium market, but this market is what we focus on, what we followed for years. And usually once a year, sometimes twice, this market will give you that type of opportunity where you'll see declines that don't really align with the fundamentals or even with the uranium price. We saw equities pull back, since February, March of last year. They had another little run into April, May of last year, but since then it's pretty much been kind of a slow decline with a few fits and starts along with the spot price, even though the term price had been rising. But then you have moments like this first week of April where just everything is getting thrown out indiscriminately. And you and I both put money to work. I February through March was sort of like this good to keep some cash on hand, but putting some money to work a little bit. And then when the big washout comes, when you see RSI 25 and RSI 20, that's when I start to get levered a little bit. So I put a lot of money to work that first week of April, especially with some leverage. It's paid off extremely well over this last month. But, that's just a short-term trade. Longer term, just everything looks incredible. We can talk about any element of the fundamental setup. There's so many things to discuss with a limited amount of time. So let me know where you want to take this because there's a lot to unpack for sure.
Yeah, yeah. So, just getting some perspective from you. So, you were before you focused specifically on uranium, you were trading, I think. Were you trading or were
Yeah,
you?
just a private retail investor, primarily doing momentum technical trades leading up to,
Hmm.
the mid 20 teens. And then as I started to sort of not come out of that, but started to utilize fundamental analysis along with the technical trading was sort of when that uranium thesis came to me, and the whole kind of idea of contrarianism really cemented itself.
Gotcha, gotcha. So, in particular moves like this, so obviously, we hear the hate mail, folks mad they lost some money or whatnot. And what I've been noticing is, I mean, even last year we had the Japanese was the yen carry trade,
Hmm.
and and
First week of
uranium
August.
equities, yeah, uranium equities plummeted significantly, right? I was buying during that time, and then we had a significant, yeah, significant rally back. Um, I was able to take some profits off the table, and then we had the deep seek, come out, and then you had another big drop, right? And so during that time, I bought, and no, actually during deep seek, I sold majority of my chemical, and then we had the Liberation Day. And so within the last year, we've had multiple big drawdowns. And so for a someone that's a trader, that's a long-term investor slash trader, um, how do you take advantage of that?
So I have a significant portion of my own personal portfolio that is much more longer term vision. So these are stocks that I like to hold in and out of the uranium space that I plan to hold for multiple years, barring some unforeseen event or some unpredictable news, company or sector specific. So these are, gold streaming companies, things like that. And then some of the larger cap uranium equities, exposure to the physical trust. And, but I always have, most of the time, I have some cash on hand to deploy when the market gives you opportunities. The other thing I like to do, and this is me personally, of course, everybody has their own way of investing, and you can skin a cat a thousand different ways, right? And everything works if done well. Technical trading, momentum trading, shorting, options, whatever it is you like to do, it can work, right? So, but what I tend to do is have a significantly diversified portfolio. The largest positions are the highest confidence positions, and I would argue the best risk reward positions. So these are companies or ETFs, or in some cases physical trusts that I see um, little downside potential, even if the upside potential isn't as great as saying like an aggressive options trade or a junior miner. And those positions make up the core stable part of my portfolio. And then I'll have, a dozen positions, maybe up to 15 across the portfolio that's much more diversified and sometimes more speculative. So when I see something like the first week of April, where good companies were being thrown out like yesterday's garbage, like Cameco. Cameco hit $35. I mean, that was a buy at $45. It hit 35 and change on that low print. That's when I sell something I have low conviction in, some speculative whatever, in or out of the uranium space, doesn't matter. Usually it's out of the uranium space if the uranium space, generally speaking, is giving me the most opportunity in that moment. And I saw that in early April. So I'll go ahead and free up more cash in lower conviction positions that are there essentially as speculations or part of my diversification strategy, free up a little bit more cash and then put on some longs. And when moments like this happen, I usually get levered. So I have four different options positions in the uranium space that are on right now that I largely put on in early April. So this gives me a lot of leverage. A 30% up move in the underlying equity will be a 3 to 5x. I really like vertical call spreads, and when I'm shorting something, vertical put spreads is just kind of my thing. So have a diversified portfolio. Don't put all your eggs in one basket. Uranium is my largest exposure, but it is my only exposure. So I have a little bit of oil and gas, a little bit of copper, a little bit of nat gas, a little bit more on the precious metal side. Uranium is still my highest conviction. I still see a very positive, very strong runway ahead of us on that front. And when the market, usually, especially when things are starting to look shaky, good to have a little bit of cash. When the market gives me incredible opportunities for X, Y, or Z stock, usually I will peel off some other exposure to speculative positions that are there for speculation and diversification to create a little bit more cash into something very, very high conviction. That's just kind of how I roll. That's worked for me over the years. It might not work for everybody, but there's nothing wrong with a long-term buy and hold portfolio, the dividend portfolio. If you want to trade every single day, like everything can work. This is just what works for me. And when the market is super risk off and giving me opportunities, I tend to get very greedy, and I tend to create cash out of things that I just don't absolutely love, but are in my portfolio, and just go hard into something that I have very high conviction on.
Yeah, yeah, yeah. That makes sense. So with the margin of safety. So like for example, I'm looking at Denison Mines. I've been in Denison Mines for a while. Went up to 230 and some change or whatever the recent high was, and then it went as low as I think it was $1.20 or something like that. And I remember when I was first introduced to Denison, it was at about 90 cents. And so thinking of those 2020, 2021 prices, let's say if I were to buy, and I wanted to hold for the long term. Like I would still be up on my investment because I had like a huge margin of safety from those times. And so I could see someone wanting to, like, if you bought back then and you have a huge margin of safety and you got it at a significantly depressed price, like in 2020, 2021, that longer term outlook, you're still in the profits, right? I mean, I think I was buying Chemical at $12 back in 2020, right? And I mean, the recent low was 35. And so it's like, yeah, I mean, your portfolio declined, but you're still up. Like your margin of safety is huge. Um, but some people may be introduced to the uranium trade after we release this interview, right? And so their margin of safety is going to be less than someone who got in at the major lows. And so I could see, like, because some folks, they may be disgruntled because their portfolio isn't performing well. But if you're buying towards the tops, or if you're buying because you think that the thesis is going to take off tomorrow, and you're fearing of missing out, then you're going to lose money.
Yeah, absolutely. And it doesn't matter what you or I discuss in this interview. It's not going to change human psychology or how the markets behave, how they always have behaved, how they always will behave. And that is basically that at the precise time that you should be buying, most people are selling. And the exact opposite is true. And it's always been that way since I've been following this sector. It's not unique to uranium. But when the market gives you opportunities, and to quote Lobo Tigre, everybody wants to buy low and sell high, but you can't ignore the buying low part. you know, and that's absolutely true. And if for me with this particular sector, and this is what's really important to me about fundamental investing is having a high confidence understanding of the industry and of this sector. Because what that does is it gives me some kind of underlying foundation of knowledge that I can rely on when the volatility in the equities becomes the narrative. And price becomes narrative all the time, most of the time. What's happening with the equities are down on any particular day, and there's positive news flow out there, and the long term price is stable, and China just got 10 reactors approved, but these stocks are selling off. It's like that's the story instead of what really should be the story, which is this looks really, really good for the long term. I'm going to buy when it's cheapest for me to buy. And that's just not how things work. There's somebody, I'm going to keep them anonymous, but somebody that I have communicated with privately over the past year or two who has been more recently invested in the uranium space, less than a year at this point. And this person sort of got really caught up in a couple of particular narratives in the uranium story. So one was that nothing is ever going to move for uranium again until there's more conversion capacity in the West, and got really attached to that. And then got really attached to what may or may not come out of the Trump admin in terms of whether or not they're going to support nuclear. And these couple of narratives got really stuck. And then after the tariffs were announced, and the market sold off, he was super concerned about how the tariffs would affect the uranium market. He was super concerned about the 10-year yield and what that meant for the economy, and just went down this rabbit hole of fear. And there's so much fear and so much fear, and like things could really blow up, and this could really lead to a huge recession. And those fears were in the market at that time, absolutely 100%. Like, what are these policies going to cause long term downstream? And he dumped. You were talking about Denison. It was Denison. He dumped it, and like basically at the low print. I think it was April 7th or 8th off the top of my head, $1.10. He sold the lows. And there were 1,000 other people like him on that particular day. So I'm not trying to single him out. I'm just using that as an example of market psychology and how fear can just really snowball and really get you to make the wrong decisions. And the more that you can rely on an understanding of the mid to the long term of the underlying market doesn't necessarily mean that that will dictate that you're buying at the right time. But it could mean that when the market pukes because of likely highly or entirely unrelated circumstances like international tariffs that uranium was exempted from, at the very early stages of that announcement, that you can make a different type of decision about your investments based on your forward looking analysis of the sector, an understanding of the physical market. What do utilities have to do in terms of long term contracting to cover their uncovered needs in the next few years? All of these things matter on a long enough time frame. They don't matter in that moment. When you're seeing your entire portfolio down 5, 6, 7 more percent in a single day, that sucks and it hurts. But if you have cash to deploy, or you can create some cash and take advantage of the deals that are in front of you, and confidence going forward, can make an entirely different outlook on your overall performance, swinging in and out of certain positions within this long-term fundamental backdrop.
Yeah, so you mentioned some important points there. And I really like the saying, which I didn't really understand it at first, but then now I understand it through experience and having been operating in the markets the last 6 years, is that the saying where it says bears sound smart and bulls make money. And there's always a bear case for something. And so when I'm thinking about that, it's important to understand like, okay, well, um, I may have this thesis of the market's going to collapse and everything, but I also missed out on a lot of opportunity then. Like, Meta was trading at $90 and Netflix down to $126. Like, I missed out on a lot of opportunity because I had this whole bearish mindset, and I've shared that multiple times with the audience. But just thinking about that, it's you make some important points. So you said China got 10 reactors approved. So what's happening there?
Yeah, China is keeping up with the expected pace essentially in their new reactor builds. So they're now building these large Hualong 1 boiling water, light water reactors, very large gigawatt scale reactors they're building in 5 years. And they're doing it for $3 billion a reactor. It's incredible what they're able to do right now. And they have, I believe it's 57, 58 gigawatts operating currently. Their stated goal is to reach 200 gigawatts of nuclear by 2035. I don't think that is going to happen, but I do think that they will reach a reasonable 150 gigawatts by 2035, which is 90 gigawatts more than what they have right now. And that would be about 8 reactors, new reactors built every single year. And they are actually on pace to hit that based on what they have under construction currently, which is 35, 36 reactors under construction at the moment. And a few weeks back was 10 new construction approvals that happened in a single day. So China is rocking in terms of the pace of their new builds. They have also been the most aggressive buyer in the physical uranium market especially in the long-term contracting market over the past 3 years. They've been the most aggressive, highest volume contracts have been done by the Chinese. In addition to their joint ventures in Kazakhstan, in addition to they're developing an ISR project in Inner Mongolia that's ongoing. Hard to get exact details out of that project, but that we have that in our model to be producing, in the late decade, early 2030s. Hard to say how much it's going to be, but it's going to be something. But even with all of that said, they've got big inventories. Just saw something today that China is on pace to have 1,500 nuclear warheads by 20, I think it was by 2035. So that big inventory number that we all hear that China has, this 600 million pounds of uranium in inventory, that's across the fuel cycle, that's sovereign strategic reserves, and that's military stockpiles. These are not just commercial inventories. This is not uranium, UF6 or U3O8 sitting in a can that's available for sale. These are strategic inventories. In fact, the only enriched uranium that China has been selling has been what they've been able to import from Russia. So they are net buyers, and they will be net buyers for years and years and years to come.
Yeah, that sounds very bullish. What are some other things that are happening around the uranium market um that's like positive news for the space? So like obviously we see the share price decline, and that doesn't doesn't dictate the value of the companies or disprove the narrative or the thesis. But it seems like there's other stuff that keeps compounding on this as well. So we have China, the new reactors, and them coming online to buy more, and just them having a strategic stockpile. What else is happening out there?
So there's three big news items that have come across the tape in the last 2 weeks. One of those was the Cameco conference call. There was commentary that Kazatomprom specifically, had yet to sign a contract for the construction of the new sulfuric acid plant that they've been talking about for the last 18 to 24 months. This 800,000 ton sulfuric acid plant that Kazatomprom is going to have built, that is crucial for the fast expansion, especially of the Budenovskoye 6 and 7 deposit, the joint venture with Russia. This is their big growth project. So this sulfuric acid plant supposedly will take 18 to 24 months to build. That's probably the case. It's not a first of a kind, and it's being built by an Italian contractor that built the previous sulfuric acid plant. Now, the previous plant took a lot longer to build. So we'll have to see how this goes. But 18 months, maybe 24 months to construct it and get it operational, but it hasn't had a shovel in the ground yet. So what we're looking at really is mid 27 best case scenario for this new acid plant to be operational. And then it's another 12 months before you see an increase in production coming out of wherever that acid is going into the ground. So their development, so that was the conference call from Cameco, the commentary that they hadn't started that project yet. And then you had an article come out the following week where a Kazakhstani executive was saying that the development of Budenovskoye 6 and 7, this Russian joint venture, is majorly delayed. And this is the biggest growth project in the country. They expect at nameplate 100% of subsoil use will be 6,000 tons of production in a single year. That's over 15 million pounds. It's a huge, huge project. And, maybe they'll hit 2.25 million pounds this year. It's going much, much more slowly. They project that to be at nameplate in 2027, and that's not happening. So their big growth project is delayed. They're still looking like they will, on a 100% basis, be able to increase production year over year over last year. But most likely they're going to come in on the low end if they even hit that range of guidance. The low end would be 25,000 tons. So that's the big player in the space. And then, of course, most of the uranium in the country, whether that's Kazatomprom specifically or 100% basis, is being sold to the East, being sold to the Russians and to China. And that's going to be an increasing trend there. So that's the first big story. The second one,
does that mean like I'm assuming that means like the market could be tightening tighter for longer because they're not able, they're delaying these projects to produce more uranium.
For
Is that
sure.
correct?
It just means there's less uranium available to be contracted going out, into the 2030s, which is really where this supply shortfall starts to accelerate in a major way. But of course, the other implication with this is this big project. The first few years of this are already of production. Kazatomprom's share of that production is committed to Russia. And then going forward from that, half of the production, 49%, is owned by Rosatom, will be in Russia. Russia's short uranium. So they've got a lot of enrichment capacity, a lot of conversion capacity, but the demand on their enrichment is so great that even though they have 30-something% of the global conversion capacity, they're net buyers of UF6. They're net buyers of uranium. So they need more uranium. And this big Budenovskoye 6 and 7 is the most important growth uranium project for Rosatom, bar none. They don't have a lot of great developments happening globally. They're trying to work on this ISR project in Namibia. They're kicking some tires in Niger. They've got their own projects. They had some flooding at their prior Gunsky mine just a few months back. Mine number 6 has been 2 years away from production for the last 8 years. So, all of these elements for Russia mean a tightening for them specifically. But yes, slower acceleration of ramped up production in Kazakhstan, is going to be the base case. They will be able to increase production over time, but going to 80 million pounds a year 2 years from now is 1,000% not going to happen. Less uranium available for utilities going forward coming out of Kazakhstan, especially if you're a Western utility. So that's kind of that big theme around that element. Another big story that came out just last week or earlier this week, excuse me, is that the Sprott Physical Uranium Trust raised $25 million, 25 point something million dollars in a private placement that they got done at a premium. So they did this placement at NAV when the trust was trading at like a 5% discount to NAV. So you had institutional interest, and Sprott Inc. took part in the placement as well. But you had institutional interest willing to pay a 5 or 6% premium to the market price to put cash directly in Sprott's pocket. Now Sprott has solved their cash problem for the next 12 months or so. They don't have to sell any uranium in the market. And they would have only had to sell 50,000, 100,000 pounds every, 6 to 12 months to keep enough cash in the coffers to maintain operations essentially. But I think this is a really unique signal to the market because you have institutional players that understand not only the implications of Sprott having to sell a little bit of pounds, which looks worse than it actually is. If they had to sell 50 or 100,000 pounds, it wouldn't have done anything to the spot price. So that concern was way overblown. But what it also does is it shows that there's appetite. There's appetite from institutions to pay a little bit of extra, knowing where that cash is going. So, of course, the implication being, how much more interest is there in doing this? Can the trust get back up to that range of the discount to NAV? For sure it can. When it does, how much more money is going to flow into this via another placement? Nobody knows, but it's something. So that's really exciting that precedent has just been established. And I honestly think that anybody shorting this sector should take note of what just happened. The third story that is significant is that the Trump administration leaked out, this was 2 weeks ago, I believe, at this point, or was it just last Friday? It might have just been last Friday, that they have a goal of quadrupling nuclear capacity in the United States by 2050. Now, of course, this is such a lofty goal that it's almost unbelievable, and that you have to see the how they are going to achieve this before even celebrating it. But that's an incredibly big statement. And of course, part of that announcement is that multiple executive orders are in the works that are going to accelerate the development of new nuclear energy in the United States. And we don't know what that's going to look like. There's some whispers out there around further revisions to the Nuclear Regulatory Commission that while the NRC really is not an impediment to building new large nuclear, especially of what has already been approved, like the AP1000s, NRC is not stopping that whatsoever because there's dozens of sites that these things can be built at right now, already approved of an approved design. As far as the advanced nuclear reactor goes, and these dozens and dozens of new designs, and a few of them have put in applications to the NRC. This is a years-long process. I just saw some data today that the last new design that was submitted to the NRC for approval, which is just in recent years, was 2 million pages in this application. And it cost $500 million, and it took 4 or 5 years to go through that process. It's absolutely insane. Of course, we need to have a regulatory body that makes sure that these designs are safe and that they're built in the manner to necessitate safety and lack of meltdown risk for the surrounding communities. Of course. But there's got to be a way to do this more efficiently. So some of these executive orders, one of these might be addressing that, limiting the power of the NRC potentially. Something may have to do with the Department of Defense. I think the DoD is maybe somehow going to be involved in this. We don't know what it's going to look like. But the administration is telling us we want and need to drastically expand domestic nuclear, and we're working on how to do that right now. So that's kind of this impending news item that's kind of hanging over the market right now. Those are three big stories from the last couple of weeks.
Yeah, got it. And pretty much even with that, the um I mean, equities haven't, I mean, they've started bouncing back, but they haven't bounced back significantly based on all this bullish news. So like it does look like, I mean, I'm gonna go buy some more, just based off even hearing this information. But yeah, I mean, they're still off the highs and everything, especially the recent highs.
Oh, they're well off the recent highs. The equities have largely moved in line with the spot price. And now that we've seen the spot price recover a little bit, it bottomed at 63.50 or whatever it was at the very low print in March and has recovered now to 70.50, I think is the last quote from UXC. And we saw 72 mid-market a couple of days ago. It's been kind of quiet for the last couple of days, but the physical market dynamics have shifted significantly. We're at this very kind of odd precipice right now where typically you have slow months, June and July. Usually things start to pick up into August as expectations of new deals being made post WNA in September. So usually June and July are slower. And so there's kind of this feeling in the market that's like, are we going to get the sell in May and go away? Or are things different this year? And what is happening in the physical market? Are we going to see continued activity? Basically, what has shifted from December, January, February is that there were a handful of motivated sellers in the spot market, not huge volumes, but there were traders that were selling, just dumping whatever they had off takes from the Uzbeks or whoever. You had some hedge funds that were selling to end the year in December. That continued into January, selling physical uranium, kind of de-risking. And you also had this ANU fund based out of Kazakhstan, this defunct fund that wanted to get rid of their pounds. And that was an absolute mess in how they did it. It could have been done in an instant back in September. They could have sold all 2.2 million pounds at 75, 80 bucks a pound. It would have been done. But instead, they dripped it out and hung 100,000 pounds, 200,000 pounds over the market and said, hey, we've got this. And then a couple of buyers came in and they pulled back. I don't know why. We don't even know who's brokering this material. But Kazatomprom did not want to buy that material back. And you're like, why? They're at a 10-year low in inventory. Kazatomprom at a 10-year low in their inventories. Why wouldn't they buy this material back? They sold the material to the fund. I think it was in the 40s dollars a pound. So for them to sell it in the 40s and buy it back in the high 60s, that's not a risk that, and even though they need the material and even though the price point for the forward curve is way higher. You go out and you sell 3-year forward, you're paying mid 80s, if not 90 bucks a pound, right? Or you're selling it for that. So you could buy in the 60s and sell it in a long-term contract at 80 to 100 and beyond. But they couldn't do that because of the personal risk that a Kazatomprom exec would have to take to make that decision. There's a current former exec from Kazatomprom behind bars in Kazakhstan right now on corruption charges, supposedly because he sold uranium in too high a volume in long-term contracts when the prices were lower. Now the prices are higher. Somebody's pockets must have been getting filled is kind of the take on that. And we don't think that's the case, but that is a risk in this country. Priority number one, if you work at Kazatomprom, is don't end up behind bars. Priority number two is maintain operations and bring shareholder value. It's still a majority state-owned corporation. There's still that type of thing that's going on there. So those ANU pounds held over the market, those aren't there anymore from what we're hearing. And the dynamics in the market have changed significantly. So now you have sellers kind of pulling back a little bit. You have a lot of utility interest coming into the spot market and into the carry trade market. Let me give you a really interesting statistic. So the typical utility involvement in the spot market on an annual basis, if you go back over the last 5 years and average it out, is less than 20% of the overall traded volume. And most of the traded volume in the spot market is actually pounds being traded back and forth. It's not being consumed by an end user, which would be a utility. Less than 20%. Year to date this year, more than 70% of the volume in the spot market has been utilities. That is a major shift in the dynamics of the spot market. So not only do you have utilities buying material in the spot market, you have them stepping back up to the plate, signing midterm contracts with traders and with banks in a carry trade. Why are they not showing up at Cameco and signing $1 million, million pounds of delivery for 7 years starting in 2029. Why aren't they doing that right now? Because the price is still far higher than what they could get in a carry trade. And there's still a lot of uncertainties around what is going to happen with Russia, what is going to happen with tariffs. That uncertainty is passing a little bit, which is one reason why we're seeing more activity in the spot market and carry trade market. But there's still sufficient geopolitical uncertainty right now, keeping the big utilities from signing big contracts. And that's what's coming back half of this year and going forward. Between now and then, utility activity has continued to slowly increase and a little bit of demand starting to turn in the spot market. What do you see? The price goes up $5 or $6 over the course of a month. It doesn't take much, and it's not going to take much to see big price moves once we see more volume come in of demand on behalf of utilities. And that's what's coming. Will we have a quiet period? That's entirely possible for a couple of months. With that said, it's going to be less quiet than it usually is. There's multiple RFPs right now out in the market. There's one RFP, 500,000 pounds for delivery, I think in 2026, that has gone unfilled for 6 weeks now. And more utilities are expected to come to the table in the coming months. So I think we're going to see more activity than we typically do in the summer months this year.
Got it. Got it. So, so the term market, so pretty much utilities are they're messing around in the spot market, and um, and so what does this look like term for term contracts this year? Like when are those typically signed? I know last year some were signed at a higher uranium price. Um, then we had a decline at the 63, and I understand like some of the geopolitical um, headwinds or uncertainties or tariffs and things of that nature, which that impacted a lot of companies. I mean, you had many companies that did hiring freezes and felt that they couldn't really project out how they were going to bring in profits and such in the future because they were just like, okay, it's a lot of uncertainty. So that did impact a lot of different companies. But I'm also thinking about, okay, well, spot uranium was at 63, $63. Like I would think that, some of those companies would go in and solidify some contracts or some long-term contracts at that price.
Well, see, that's the thing, Daryl, is that the spot price dropping down to 63, 64 didn't move the term price. So no matter
Oh yeah.
what the spot price was doing, if you called up Cameco and wanted delivery in 2029, they're going to quote you the same price that they did 6 months ago. They're holding firm, they're starting, 75, 80 base floors. So a floor in a contract, even for delivery out, let's say starting in 2029, 4 years from now, if you have a $75 floor, that means if something crazy happens and uranium is trading at less than $75 in 2029 at the time of delivery, they still have to pay that $75 floor. Utilities. So Cameco is saying we're taking our current costs of production, the profit margins that we need to realize for our own operations and de-risking the future. Now, keep in mind, Cameco had to shut off their primary mine for 4 years at the tune of $10 million a month in care and maintenance. So any utility out there that thinks that producers are supposed to sell at break even is absolutely insane. They exist to make a return for shareholders. That is literally why a public company exists. So Cameco with a $75 floor means at the time of delivery, that's the minimum they're going to achieve. And their ceilings are now pushing into the mid 130s for this late decade delivery into the 2030s delivery. So even though the spot price fluctuated a lot, the term price has been firm. And the term price, the ask for the legacy producers has not dropped with the fluctuations in the spot price. So this $80 a pound print from UXC that's I think going on 5 or 6 months at this point, that's largely there because we've seen almost no volume in the term market. And the little bit of volume that we have seen has come from one or two developers or restarts that are willing to sell at $80 a pound. So once that capacity is gone, we're headed higher. And the term price has actually been within a $2 or $3 trading range for more than a year now. And if you go back and look at the fluctuations in the long-term price, what you'll see a 8 to 12 month up move and an 8 to 12 month sideways move, and then an 8 to 12 month up move, and then an 8 to 12 month sideways move. And that's happened, I think, 3 or 4 times since the price bottomed. So we're coming up towards the end of that consolidation period. And we know that more demand is coming. And you can pretty much set your clock to expecting demand in Q3, Q4. It's a very good sign to see demand actually increasing during the month of May, month of April. Very good sign to see that, and hopefully we'll see some continuation in the price as well.
Yeah, yeah. Man, lots of bullish news there. Well, man, Justin, appreciate you coming back on the show and everything and sharing all of that wealth of information with us and everything. What are some other things you're looking out for this year? I mean, there's obviously a lot of uncertainty and there's still some, kind of fear in the markets about tariffs and everything. And I know that doesn't shake, our thesis or whatnot, but what are some kind of general market outlooks you're thinking about?
For the uranium market specifically, and honestly for nuclear in the United States, I'm really waiting to hear what the Trump administration comes up with. Christopher Wright is a very intelligent, very solid human being, and I think he understands the implications here. He, of course, is very bullish on nat gas and the growth of nat gas and fossil fuels in general, just energy abundance. The good thing for nuclear, of course, is that nat gas can only expand so much. There's only so much that can be produced. There's limitations in availability of turbines, limitations in as far as locations and pipelines. So nat gas is not going to fill the entire gap, but energy is a major theme for this administration. So I'm very curious to see what comes out of the Trump admin. We know the utilities are pushing very hard right now, including the NEI, the Nuclear Energy Institute, is pushing very hard for the Trump admin to keep the investment tax credits that were established in the Inflation Reduction Act in place. It's not looking like they're going to remain in place, but something like that is probably going to come out because the industry wants it so bad. And if the Trump admin wants the US utilities to be the ones building the reactors, they're going to have to throw them a bone of some kind. So I'm very curious to see how that goes. Really interesting stuff happening with some of these developers. One of them is called the Nuclear Company. They're basically trying to pull all of the different pieces together to get new nuclear built. And so they're engaged with the tech companies. They're engaged with the actual contractors that do the building and the manufacture of the parts to build a reactor. They're engaged with Westinghouse. They're engaged with the utilities. They're engaged with the U.S. Government, Department of Energy, Department of Defense. And all these elements are kind of spinning around, and they're sort of acting like the general contractor, bringing everybody together to get something done. And they want to build AP1000s in fleet mode. And very interesting, they just set up their office in the town adjacent to the VC Summer plant in South Carolina. Now, this has one operating reactor, and they had plans to build 2 and 3, and Unit 2 was under construction, another AP1000, at the same time as Vogtle 3, when Westinghouse was bankrupted and VC Summer pulled the plug. They pulled the plug. So Santee Cooper is the owner of this plant. They put out an RFP a couple months back saying, is there any interest in ownership of Unit 2 and or potentially being involved in a recommencement of construction of this reactor to get it operational? They had over 60 responses to this RFP of interested parties that want to either buy the plant to restart construction or somehow be involved in that process. And amongst those 60 responders were big tech companies. And so, there's a bunch of kind of tea leaves out there. If you put the pieces together, you can kind of see what's on the table. I'm bullish on U.S. nuclear. I'm bullish on U.S. miners, and there's a lot of geopolitical tension, and Trump is definitely fomenting that tension, for better or for worse. So I think once there's clarity around this, once there's an ending to the war in Ukraine and clarity around what the Trump admin wants to do to support nuclear, it's really going to be a lot of momentum for the utilities, for the building of nuclear, for being able to come into the market and contract for big volume. I don't think the utilities at this point are that opposed to the price. The price has stayed stable for a long enough period of time. I think it's just uncertainties around these elements that need to clear. And we're going to see some major volume come into the term market. And there's only one way the price is going when that happens.
Yeah, yeah. Well, sure. I'm looking forward to that. So appreciate you, Justin, for coming on and giving us that update. Everyone, be sure to go check out uraniuminsider.com. I'll also link to his YouTube channel where he does some videos for his subscribers and everything. And Justin, appreciate you for coming back on.
It's always fun to talk uranium with you, Daryl. Pleasure.